Chris, we were talking earlier about how remarkably sideways Boeing shares have been for a year and a half, obviously absent that spike into March.
Sure.
How does it set up?
Well, it's 18 months of no price progress after a 330% gain the prior 2 years. So the question is this just a pause in a longer-term uptrend, or is this the start of a change? I think for the bulls, you really got to defend that 330 level. Those are the June lows. It's been a key test. But as far as the market call is concerned, Boeing's an important weight here. It's 8% of the industrial sector. So is this a commentary on the market, or is this just a commentary on that one stock? If you actually look at industrials equally weighted, so normalizing for its weight, industrials equally weighted are actually improving here. So we think this is a Boeing problem, not an industrials problem, not a market problem. There's actually some improving charts within industrials. CAT quietly getting better, Deere quietly getting better. So I think the broader picture is okay, even with Boeing on the sidelines here.
The broader picture for industrials, you're saying, looks okay, improving. That would suggest that they may help lend support to a market that had previously been relying on some of the more defensive groups. Where's the overall market?
We've seen this little modest turn towards cyclicality over the last couple of weeks. There's a couple ways to look at that: discretionary versus staples, industrials versus utilities, semis versus software, all starting to see some turn there. I think when you look at industrials in particular, the sector has the highest R squared with the S&P. So when industrials are going up, the market tends to be going up. Last week, you had about 60% of industrial stocks make a new high. So under the surface, the participation's actually broadened out in that sector. We welcome that.
What does that mean for interpreting this, mild little pullback we've had over the past couple of days from a record high?
I think what's been telling the last few days is there's almost been no selling pressure on the downside. Even on Friday, which was a sharp down day at the you had more advancing stocks than declining stocks. You had a very similar setup yesterday. So if this is going to manifest into something more serious, we would expect to see more pronounced internal selling pressure, and that just has not shown up yet. So I think you have to give this market, look at it to that 2960 area, 2950 area as good support, be a buyer or pullback. The trend here is still up.
Do we need the participation of transports and small caps to confirm this rally?
What's so interesting about small caps in particular, if you looked historically over the last 40 or 50 years, small caps actually tend to underperform in secular bull markets. It's one of the most misleading things you would ever expect. And in particular, look at like 82 to 99. Small caps were basically laggards that entire 20-year secular bull market. So I'm not that concerned that small caps aren't leadership. Now, I don't want them going down, but I'm not that concerned that they aren't leadership. And if you look at the transports, quietly, some groups are actually getting a little bit better. The airlines in particular over the last couple of weeks.
It's a real bifurcation, though.
Very bifurcated. Rail's good. Right. Airlines getting better.
Truckers terrible.
Air freight and trucking may be starting to turn here a little bit. But I think the airlines, in terms of what's timely, is worth a look here. JetBlue, Delta, UAL, all quietly getting better.
We're looking at the Treasury yield setup.
Yeah.
Are they going higher? Yields?
I think we're at a point here where there's been a bit of a buyer's climax in bonds. If you look at flows into the TLT, which is the long bond ETF, you are just in the 99th percentile of all observations over the last number of years. So I think you've seen an extreme in flows. You've started to, I think, see some extremes in price. It's very notable to me that the banks did not take this last leg lower with bond yields. Like Citigroup quietly acts well. Goldman Sachs quietly turning here a little bit. So I think there's some equity market signals that would suggest you're at least close to some type of a bottom in bond yields.
Pepsi reported earnings better than expected on the top and the bottom lines this morning. What do you see for staples in general and for Pepsi in particular, since it's double the performance of its closest competitor, Coke?
I think when you look within staples, it is such a bifurcated sector. If you look in May when the market was weak, but you own the wrong staples, if you had owned Colgate and Altria and Clorox, you weren't rewarded for being defensive versus a Pepsi or even a Coke, which has been good. Walmart's been absolutely fantastic. Costco has been quite good. It is one of the most bifurcated sectors in our work, but I think broadly the defensive trade that we saw so dominant in the first half of the year is showing some signs of exhaustion, and that may be a message on bond yields here as well.
And if you're seeing this subtle turn toward more cyclical areas, what does it mean for the kind of formerly bulletproof big cap tech FANG type stocks?
That's the big question here, and I think
they've worked well in different environments.
FANG's another area where you're actually starting to see some bifurcation. Facebook acts great despite all the bad stories and the quietly acting better. You have Amazon on the verge of new highs. Apple, not so much. So it's a very bifurcated group. But as far as cyclicality goes, watching the semis versus the software stocks, I think is going to be a very telling barometer as to whether or not the economy picks up in the second half of the year. We have started to see that inflect positively over the last couple of weeks. We've started to see, I also think importantly, discretionary outperform staples here recently, high beta outperform low beta. If the economy is going to pick up in the second half of the year, those are the market tells that we want to look at.